The price of conquest funding warfare before Wall Street. War, it is an unfortunate constant throughout human history. For millennia, the clang of swords, the roar of cannons, and the march of armies have shaped the destiny of civilizations. But before the advent of modern stock markets, how did nations finance these costly endeavors? The answer, often brutal in its simplicity, lay in plunder, taxation, and loans. Ancient empires built on expansion often funded their wars through the spoils of conquest. Plundering the riches of defeated enemies filled royal coffers and fueled further military campaigns. The Roman Empire, for example, famously financed its legions through the wealth seized from conquered lands. Taxation, though less glamorous than plunder, provided a more stable source of revenue for war chests. Rulers, from ancient kings to medieval monarchs, levied taxes on their subjects to support their armies. These taxes often took the form of grain, livestock, or labor, directly supporting the war effort. As trade routes flourished and economies grew more complex, the practice of securing loans from wealthy individuals or foreign powers emerged. These loans, often repaid with interest, allowed nations to raise large sums quickly, but carried the risk of crippling debt if wars proved costly or unsuccessful. The financial landscape of warfare, though lacking the complexities of modern stock markets, was a tapestry woven from conquest, taxation, and the weight of borrowed fortunes. Trade and commerce also played a crucial role in the financial strategies of ancient and medieval rulers. By controlling key trade routes and imposing tariffs, they could generate additional revenue to fund their military campaigns. Alliances and trade agreements with other nations or city-states often included clauses for mutual defense, effectively pooling resources for warfare. The economic planning and financial acumen of these early societies were remarkable, laying the groundwork for the more sophisticated financial systems that would emerge in later centuries. Currency, in its various forms, also played a pivotal role. From minted coins to barter systems, the exchange of goods and services was essential in maintaining the war efforts. Mercenaries who fought for the highest bidder were often paid in gold or other valuable commodities, further intertwining the economy with the machinery of war. The aftermath of these wars often left lasting impacts on the economies of the involved nations, with the costs of rebuilding and reparations adding to the financial burdens. Thus, the story of funding warfare before Wall Street is a complex narrative of human ingenuity, resourcefulness, and the relentless pursuit of power and survival. The arsenal of industry, the rise of war stocks. The Industrial Revolution, a period of unprecedented technological advancement, irrevocably altered the relationship between war and finance. The advent of mass production, coupled with innovations in weaponry, gave rise to a new breed of enterprise, the arms manufacturer. No longer was the production of war materials the sole purview of government-run arsenals. Private companies, driven by profit and fueled by technological advancements, emerged to supply the growing demands of modern warfare. One of the earliest and most prominent examples was the Krupp family of Germany. Their steelworks, which began by producing tools and machinery, expanded rapidly in the 19th century to manufacture artillery and other armaments. The rise of companies like Krupp marked a turning point. War, once the domain of kings and generals, was becoming an industrial enterprise, with private companies playing an increasingly influential role. This industrialization of warfare coincided with the growth of stock markets, providing a new avenue for these burgeoning arms manufacturers to raise capital and expand their operations. The buying and selling of shares in companies like Krupp, inextricably linked to the fortunes of war, gave birth to what we now know as war stocks. A world at war, a market in flux. The financial front lines of the world wars. The 20th century, tragically bookended by two world wars, witnessed the devastating potential of industrialized warfare. These conflicts not only reshaped nations, but also had profound impacts on global financial markets. The financial markets, inextricably linked to the global economy, were profoundly impacted by these conflicts. Investors and governments alike had to navigate the turbulent waters of wartime economies. World War I, with its unprecedented scale of destruction and demand for war materials, supercharged the growth of the defense industry. Factories that once produced consumer goods were quickly repurposed to meet the insatiable demand for military supplies. Companies involved in manufacturing weapons, ammunition, and other war-related goods saw their stock prices soar as governments poured resources into the war effort. This surge in demand created a boom for industries that could adapt to the needs of war. The Dow Jones Industrial Average, a key indicator of the U.S. stock market's health, experienced both volatility and overall growth during this period. Investors were both cautious and opportunistic, seeking to capitalize on the war-driven economy. The end of the war, however, brought a different set of challenges. The transition from a wartime to a peacetime economy was fraught with difficulties. As demand for military goods plummeted, many defense companies faced a slump. Factories that had been running at full capacity were suddenly idle, leading to widespread economic uncertainty. The stock market, reflecting this uncertainty, experienced a significant downturn. Investors who had thrived during the war now faced a starkly different economic landscape. World War II, even more globally destructive than its predecessor, once again led to a surge in defense stocks. The scale and scope of the conflict demanded even greater resources and technological advancements. The conflict highlighted the critical role of technology in warfare, with innovations like radar, jet engines, and the atomic bomb emerging from the conflict. These technological breakthroughs not only changed the course of the war, but also had lasting impacts on the post-war world. Companies at the forefront of these technological advancements, many of which were already major players in the defense industry, saw their stock prices skyrocket. The war had created a new era of technological innovation and economic opportunity. The post-war period, however, ushered in a new era of geopolitical tension, the Cold War. This prolonged period of rivalry between superpowers continued to shape global financial markets and the defense industry for decades to come. Section 4. From Iron Curtain to Iron Grip, the Cold War and the Military-Industrial Complex. The Cold War, a decades-long ideological and geopolitical struggle between the United States and the Soviet Union, introduced a new dimension to the relationship between war, industry, and the stock market. While this era lacked the large-scale conventional warfare of the two world wars, it was characterized by a constant state of military buildup and technological rivalry. This arms race, fueled by mutual suspicion and the threat of nuclear annihilation, led to the emergence of what President Eisenhower famously termed the military-industrial complex. This term described the intricate web of relationships between the government, the military, and the defense industry. Defense contractors, assured of consistent government contracts, invested heavily in research and development, constantly pushing the boundaries of military technology. This, in turn, led to a steady stream of new weapons systems, aircraft, and other military technologies, further fueling the arms race and ensuring the profitability of defense companies. The stock market, reflecting this constant demand, witnessed a period of sustained growth in defense stocks. Companies like Lockheed Martin, Boeing, and General Dynamics, beneficiaries of lucrative government contracts, became synonymous with the Cold War military-industrial complex. The end of the Cold War, however, brought about a new set of challenges and opportunities for the defense industry and the stock market. Section 5. A New Millennium, a New Battlefield. The War on Terror and the Modern Defense Industry. The turn of the 21st century brought with it a new kind of conflict, the War on Terror. This conflict was unlike any other, as it was not confined to a single nation or region, but spanned across the globe, affecting numerous countries and their defense strategies. Following the tragic events of September 11, 2001, the United States, with the support of international allies, launched military operations in Afghanistan and Iraq. These operations aimed to dismantle terrorist networks and bring stability to regions plagued by extremist activities. This new era of warfare, characterized by asymmetrical tactics and a focus on counterterrorism, had a significant impact on the defense industry and the stock market. Traditional large-scale battles were replaced by guerrilla tactics, cyber warfare, and intelligence-driven operations, requiring new tools and technologies. While traditional defense giants continued to benefit from government contracts, a new breed of company, specializing in surveillance technology, drone warfare, and cybersecurity, emerged. These companies developed cutting-edge solutions to meet the evolving needs of modern warfare. Companies like Palantir, known for its data analysis software, and AeroVironment, a leading drone manufacturer, saw their stock prices surge as the demand for their products and services grew. Their innovations in data analytics and unmanned aerial systems became crucial in the fight against terrorism. The War on Terror also highlighted the increasing privatization of certain aspects of warfare. private military contractors began to play a more prominent role, providing specialized services that were once the sole domain of national militaries. Private military contractors such as Blackwater, now Academy, took on roles once exclusively reserved for the military, from providing security to training local forces. Their involvement in conflict zones brought both operational advantages and ethical concerns. This trend towards privatization, while controversial, provided new investment opportunities within the defense sector. Investors saw potential in companies that could offer specialized military services and technologies, leading to significant growth in this market segment. The stock market, reflecting these evolving dynamics, saw a shift in investor focus towards companies specializing in the technologies and services in high demand in the war on terror. This included advancements in surveillance, cybersecurity, and unmanned systems. The ethical implications of profiting from conflict, however, continued to fuel debate. Critics argued that the commercialization of warfare could lead to prolonged conflicts and questioned the morality of war profiteering. This ongoing debate remains a critical aspect of the modern defense industry.